The established patterns of international trade are subject to continuous change, influenced by evolving economic priorities and geopolitical considerations. For many decades, a robust economic relationship has existed between the United States and Canada, forming a significant component of the North American economic landscape. This bilateral trade partnership has been characterized by substantial volumes of goods and services exchanged, integrated supply chains, and cross-border investment flows. However, current economic indicators and policy shifts suggest a potential evolution in this established dynamic, warranting a closer examination of the factors at play. A noteworthy development under consideration is the potential for Canada to pursue a deepened trade relationship with the European Union. This prospect is not merely a matter of incremental trade adjustments. It represents a strategic consideration that could lead to a significant reorientation of Canada's international commerce. Such a shift would involve a recalibration of established trade dependencies and the forging of new economic linkages on a transatlantic axis. The implications of such a strategic realignment extend beyond bilateral trade flows, potentially influencing broader global economic patterns and alliances. This analysis will delve into the multifaceted dimensions of this potential economic shift. We will examine the underlying factors contributing to a possible re-evaluation of Canada's trade priorities, the specific attributes of the trade agreement with the European Union that are under consideration, and the broader context of evolving international trade dynamics within which these developments are occurring. The aim is to provide a comprehensive and objective assessment of a significant potential shift in Canada's international economic relations. To fully comprehend the potential for a shift in Canada's trade orientation towards the European Union, it is essential to analyze the recent trajectory of the U.S.-Canada economic relationship. Historically, this bilateral relationship has been underpinned by various trade agreements, most notably the North American Free Trade Agreement, NAFTA, and its successor, the United States-Mexico-Canada Agreement, USMCA. These agreements have facilitated a high degree of economic integration, fostering cross-border commerce and investment. However, recent years have witnessed the emergence of strains and challenges within this established framework. Several factors have contributed to a discernible shift in the dynamics of the U.S.-Canada economic partnership. These include specific trade disputes, broader policy divergences, and a growing consideration within Canada of the implications of a high degree of economic reliance on a single trading partner. While the overall volume of trade between the two nations remains substantial, a series of events have introduced friction and uncertainty into the relationship. Specific instances of trade disputes have played a role in creating points of friction. For example, the imposition by the United States of tariffs on steel and aluminum imports from Canada, citing national security grounds, generated significant concern. These tariffs, implemented under Section 232 of U.S. trade law, were perceived by many in Canada as being inconsistent with the principles of free trade and the close security partnership between the two nations. Despite Canada's status as a key ally and security partner, it was subjected to the same trade measures as countries with less aligned geopolitical interests. This action was viewed by some in Canada as undermining the predictability and stability of the bilateral trade environment. Furthermore, long-standing disputes, such as those related to softwood lumber, have persisted, contributing to a sense of ongoing trade friction. Beyond specific tariff measures, a broader consideration within Canada concerns the extent of economic dependence on the United States market. While the proximity and size of the U.S. economy have historically been advantageous for Canadian trade, this has also resulted in a significant concentration of Canadian exports directed to a single destination. A substantial proportion of Canada's export revenue is derived from trade with the United States, making the Canadian economy potentially vulnerable to economic fluctuations and policy shifts originating in the U.S. This factor of economic dependence has been a subject of ongoing policy discussion within Canada, and recent trade policy developments have amplified the focus on diversification as a risk mitigation strategy. The articulation of an America First trade policy framework in the United States, emphasizing bilateral trade balances and assertive trade enforcement, has also introduced a degree of uncertainty into the U.S.-Canada relationship. The renegotiation of NAFTA, leading to the USMCA, while ultimately resulting in a continuation of a trilateral trade agreement, was characterized by a protracted and at times challenging negotiation process. Canada, along with Mexico, was required to make concessions in various areas to reach a new agreement. This experience underscored the asymmetry in negotiating leverage and the potential for future trade policy pressures within the North American trade framework. The renegotiation process contributed to a sense of caution and a desire to explore alternative trade relationships that might offer greater diversification and reduce exposure to potential bilateral trade tensions. In addition to trade-specific issues, policy divergences in other domains have also contributed to a sense of distance in the broader U.S.-Canada relationship. Differing approaches to climate change policy and international agreements have emerged as points of divergence. While these policy differences are not directly trade-related in all instances, they contribute to a broader context of evolving priorities and potentially diverging strategic orientations. These factors, in aggregate, have contributed to a reassessment within Canada of the long-term trajectory of the economic relationship with the United States and have prompted consideration of alternative trade partnerships. At the core of Canada's potential strategic shift in trade policy is the Comprehensive Economic and Trade Agreement, CETA, with the European Union. This agreement, which has been provisionally in effect since September 2017, represents a comprehensive framework for bilateral trade and economic cooperation. CETA extends beyond traditional tariff reduction, encompassing a wide range of provisions designed to facilitate trade in goods and services, promote investment, and enhance regulatory cooperation between Canada and the European Union member states. The agreement is viewed as a potentially significant instrument for Canada to diversify its trade relationships and reduce its economic reliance on the United States. The defining feature of CETA, from a trade perspective, is the elimination of tariffs on the vast majority of goods originating in Canada and the EU. Upon full implementation, CETA will eliminate tariffs on approximately 98% of tariff lines, creating a near-tariff-free trade environment between the two economies. This tariff elimination is progressive, with tariffs being phased out over a defined schedule for certain product categories. The removal of tariffs has direct implications for the competitiveness of goods traded between Canada and the EU. For Canadian exporters, the elimination of EU tariffs reduces import costs for European buyers, potentially enhancing the price competitiveness of Canadian products in the EU market. Conversely, EU exporters benefit from tariff-free access to the Canadian market, increasing the competitiveness of European goods for Canadian consumers and businesses. The zero-tariff provision of CETA is particularly relevant for specific sectors of the Canadian economy. In the agricultural sector, for example, Canadian producers of beef, pork, grains, and seafood gain improved access to the EU market without being subject to import duties. The EU represents a substantial market for high-quality agricultural products, and CETA provides a mechanism for Canadian agricultural exporters to expand their market share in this region. Similarly, in the manufacturing sector, Canadian producers of industrial goods, automotive components, and aerospace products benefit from tariff elimination, making their products more competitive for EU-based manufacturers and consumers. The services sector, which is a significant component of both the Canadian and EU economies, is also addressed in CETA. The agreement includes provisions aimed at liberalizing trade in services, facilitating market access for service providers in sectors such as professional services, financial services, and digital services. This aspect of CETA has the potential to foster increased cross-border trade in services and enhance economic linkages in these sectors. Beyond tariff elimination, CETA incorporates provisions designed to address non-tariff barriers to trade, which can often be as significant as tariffs in impeding international commerce. These non-tariff barriers include regulatory differences, technical standards, and customs procedures. CETA includes mechanisms for regulatory cooperation, aiming to promote mutual recognition of standards and reduce regulatory impediments to trade. The agreement also seeks to streamline customs procedures and facilitate trade logistics, reducing transaction costs for businesses engaged in Canada-EU trade. Investment is another key area covered by CETA. The agreement includes provisions designed to promote and protect bilateral investment flows. These provisions aim to create a more stable and predictable investment climate, encouraging companies in Canada and the EU to invest in each other's economies. Increased investment can contribute to economic growth, job creation, and technology transfer. The strategic significance of CETA for Canada extends beyond the immediate trade benefits. The agreement provides Canada with enhanced leverage in its broader international economic relations, particularly in the context of its relationship with the United States. By establishing a comprehensive and preferential trade agreement with a major global economic bloc like the EU, Canada strengthens its negotiating position in trade discussions with other partners, including the US. The existence of a viable alternative trade relationship with the EU provides Canada with increased options and reduces its dependence on any single trading partner. This strategic leverage can be utilized to pursue Canada's economic interests and promote a more diversified and resilient trade portfolio. Furthermore, CETA positions Canada as a potential bridge between North America and Europe, offering European companies preferential access to the North American market through Canada and vice versa. This strategic positioning could attract investment and enhance Canada's role in global supply chains and international commerce. Canada's potential strategic emphasis on the Comprehensive Economic and Trade Agreement, CETA, with the European Union signifies a notable juncture in the established U.S.-Canada relationship. This development suggests a potential shift in the economic dynamics between the two nations, moving beyond a long-standing pattern of close integration to a more complex and potentially competitive relationship. While the U.S. and Canada are expected to remain important economic partners, the relative emphasis and strategic orientation of Canada's international trade policy may be undergoing a discernible transformation. For an extended period, the economic relationship between the United States and Canada has been characterized by deep integration across multiple dimensions. Geographic proximity, shared infrastructure, and integrated production networks have fostered a highly interconnected economic space. Cross-border supply chains have become deeply embedded, particularly in sectors such as automotive manufacturing, natural resources, and agriculture. This integration has been facilitated by successive trade liberalization agreements, culminating in NAFTA and the USMCA, which have reduced barriers to trade and investment and promoted cross-border economic activity. This high level of economic integration has yielded mutual benefits, contributing to economic growth, job creation, and enhanced competitiveness for businesses in both countries. However, Canada's potential strategic focus on the EU trade agreement introduces a new dynamic into this long-established pattern of integration. A deliberate prioritization of trade with the European Union, leveraging the tariff advantages and market access opportunities afforded by CETA, would inherently imply a relative shift in economic emphasis, potentially moving some economic activity and investment flows away from the U.S.-Canada axis and towards the transatlantic relationship. This is not to suggest a complete decoupling or a cessation of U.S.-Canada trade. Rather, it indicates a potential rebalancing of priorities and a strategic diversification of Canada's international economic engagement. The United States, having historically been Canada's dominant trade partner and a central focus of its international economic policy, may observe this potential shift with close attention. The prospect of Canada actively cultivating deeper economic ties with a major global economic bloc like the EU, which is also a significant economic competitor to the U.S. in various sectors, could introduce a new element of strategic consideration into the bilateral relationship. The potential response from the United States to Canada's evolving trade strategy is subject to various factors and policy choices. One potential approach from the U.S. could be to acknowledge Canada's sovereign prerogative to diversify its trade relationships and pursue its perceived national economic interests. This approach would recognize the established framework of bilateral cooperation and alliance, while also acknowledging the evolving economic priorities of each nation. Alternatively, there could be a degree of concern within the U.S. policy establishment regarding the potential implications of Canada's deepened engagement with the EU. This concern could manifest in efforts to re-emphasize the importance of the North American economic space, to highlight the benefits of continued close U.S.-Canada economic integration, and potentially to explore mechanisms to counter the perceived diversion of trade and investment towards Europe. Specific areas of potential friction or policy attention could emerge in sectors where the U.S. and EU are direct competitors in global markets, and where Canada's trade policy choices could have a discernible impact. For example, in agricultural trade, increased Canadian exports of agricultural products to the EU, facilitated by CETA, could potentially affect the competitive position of U.S. agricultural exporters in the European market. Similarly, in certain manufacturing sectors, enhanced Canadian competitiveness in the EU market, due to tariff advantages, could lead to trade policy discussions and potential adjustments in the broader U.S.-Canada trade relationship. Beyond sector-specific considerations, the broader geopolitical implications of a potential economic reorientation in U.S.-Canada relations are also relevant. The U.S. and Canada have maintained a close alliance on a range of geopolitical and security issues, cooperating on defense, foreign policy, and international security matters. A significant shift in the economic relationship, particularly if perceived as a strategic divergence in economic orientation, could introduce new complexities into this broader alliance framework. While economic and security cooperation are distinct domains, significant shifts in one area can have implications for the other. The U.S. may seek to engage in dialogue with Canada to understand the strategic rationale behind its evolving trade policy, to address any potential concerns, and to explore avenues for maintaining a strong and mutually beneficial overall relationship. Conversely, Canada, in pursuing its economic diversification strategy, will likely seek to manage its relationship with the U.S. in a manner that preserves the core elements of the bilateral alliance while also advancing its economic interests through strengthened ties with the European Union. This juncture in U.S.-Canada relations represents a turning point, not necessarily in the sense of a dramatic rupture, but rather as a point of inflection requiring strategic adaptation and a re-evaluation of the dynamics of a long-standing and multifaceted partnership. This evolving dynamic in U.S.-Canada relations, marked by a potential shift in Canada's trade strategy towards the European Union, is not occurring in isolation. It is taking place within a broader context of significant shifts in global trade patterns and international economic alignments. The next section will examine these wider global trade dynamics and analyze how Canada's potential EU pivot fits into these larger trends. The potential reorientation of Canada's trade policy towards the European Union is occurring against a backdrop of significant and evolving global trade dynamics. The patterns of international commerce that characterized the late 20th and early 21st centuries are undergoing a period of transformation, influenced by a confluence of economic, political, and technological factors. Understanding these broader global shifts is essential to contextualize Canada's potential strategic trade adjustment and its implications for the international economic order. One of the prominent trends in global trade is a discernible move towards regionalization and the strengthening of regional trade blocs. While the multilateral trading system, embodied by the World Trade Organization, WTO, remains a significant framework for international commerce, there has been a parallel proliferation of regional trade agreements, RTAs, in recent decades. These RTAs, which encompass preferential trade arrangements among groups of countries in geographically proximate regions or with shared economic interests, have become increasingly important in shaping global trade flows. Examples of such regional blocs include the European Union itself, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, and the African Continental Free Trade Area, AFCFTA. This trend towards regionalization reflects a number of underlying factors, including the desire to deepen economic integration among like-minded countries, to address trade barriers more effectively at a regional level, and to create more predictable and stable trade environments in a context of global economic uncertainty. Canada's potential focus on the EU trade agreement aligns with this broader trend towards regionalization, representing a strategic decision to strengthen its economic linkages with a major regional bloc and to diversify its trade portfolio beyond the North American region. Another significant shift in global trade dynamics is the rise of protectionist sentiments and trade policy tensions in various parts of the world. Following a period of sustained trade liberalization and expansion of global value chains, there has been a resurgence of protectionist measures and trade disputes in recent years. Concerns about trade imbalances, job displacement in certain sectors, and the perceived impact of globalization on domestic industries have contributed to increased political support for protectionist policies in some major economies. The imposition of tariffs and other trade barriers by major trading nations has disrupted established trade flows and created uncertainty for businesses engaged in international commerce. This trend towards protectionism represents a challenge to the rules-based multilateral trading system and has prompted many countries to reassess their trade strategies and seek ways to mitigate the risks associated with trade policy volatility. In this context, Canada's potential diversification towards the EU can be interpreted as a strategic move to reduce its exposure to potential trade policy fluctuations and disputes within the North American trade area and to establish a more stable and predictable trade relationship with a major economic partner committed to rules-based trade. Furthermore, evolving geopolitical dynamics are increasingly intertwined with global trade patterns. Economic considerations are becoming more closely linked to strategic and security concerns, and countries are evaluating their trade relationships not only in terms of economic benefits but also in the context of broader geopolitical alignments. The rise of new economic powers, shifts in global power balances, and geopolitical competition are all influencing international trade flows and investment patterns. Countries are seeking to build stronger economic partnerships with nations that share their geopolitical values and strategic orientations, and trade agreements are increasingly viewed as instruments of both economic and geopolitical strategy. Canada's potential deepening of trade ties with the European Union can be seen as reflecting this trend towards geo-economic alignment. Both Canada and the EU share fundamental values related to democracy, rule of law, and multilateralism, and strengthening their economic relationship can be interpreted as a move to reinforce this broader alignment in a context of evolving global geopolitics. Finally, technological advancements and the ongoing digital transformation of the global economy are also reshaping trade dynamics. The increasing importance of digital trade, cross-border data flows, and e-commerce is creating new opportunities and challenges for international commerce. Traditional trade rules and frameworks are being adapted to address the specific characteristics of digital trade, and countries are grappling with issues related to data governance, digital taxation, and the regulation of online platforms. Trade agreements increasingly include provisions related to digital trade and e-commerce, reflecting the growing significance of these sectors in the global economy. CETA, for example, includes provisions on digital trade, aiming to facilitate cross-border data flows and promote regulatory cooperation in the digital domain. As the digital economy continues to expand, trade policy will need to adapt to these evolving technological realities, and countries that are able to effectively navigate the digital trade landscape will be well positioned to benefit from future economic growth. Canada's potential focus on the EU trade agreement, with its provisions on digital trade, can be seen as a step towards positioning itself to participate effectively in the evolving digital global economy. The potential shift in Canada's trade policy towards the European Union, facilitated by the Comprehensive Economic and Trade Agreement, CETA, will generate a complex pattern of economic effects, creating both beneficiaries and those who may face adjustments. In conclusion, the potential strategic reorientation of Canada's trade policy towards the European Union, centered on the Comprehensive Economic and Trade Agreement, CETA, represents a significant development with potentially far-reaching implications for Canada and the global trade landscape. This potential shift is not merely a tactical adjustment but a strategic response to evolving economic and geopolitical realities, reflecting a deliberate effort by Canada to diversify its trade relationships, enhance its economic resilience, and secure its long-term economic prosperity in a changing world. The confluence of factors, including evolving dynamics in the U.S.-Canada economic relationship, the strategic opportunities presented by CETA, and broader shifts in global trade patterns, has created a compelling rationale for Canada to consider a rebalancing of its trade priorities. The potential benefits of this strategic shift for Canada are substantial, encompassing enhanced economic diversification, increased innovation and competitiveness, and a strengthened role in the global economy. For the European Union, CETA offers improved access to the North American market and reinforces its commitment to trade liberalization and international economic cooperation. While the United States may face some adjustments as a result of Canada's trade diversification, the broader U.S.-Canada relationship is expected to remain fundamentally important, albeit potentially evolving in its economic dynamics. The road ahead for Canada in navigating this strategic trade reorientation will require sustained effort, policy coherence, and effective collaboration between government, businesses, labor, and other stakeholders. Successful implementation of CETA, strategic management of the U.S.-Canada economic relationship, continued diversification of trade partnerships, and investments in domestic competitiveness are all crucial elements for realizing the full potential benefits of this strategic shift. Public communication and engagement will also be essential for building broad understanding and support for Canada's evolving trade policy direction. In the broader context of global trade, Canada's potential EU pivot is illustrative of the ongoing shifts and realignments that are shaping the international economic order. It reflects a trend towards regionalization, diversification, and a more multipolar global trade landscape, where countries are seeking to build more resilient and diversified economic partnerships in a complex and uncertain world. The long-term consequences of Canada's strategic trade reorientation will unfold over time, contributing to the ongoing evolution of global trade dynamics and Canada's role within the international economic system. If you found this report insightful, please like and subscribe for more in-depth news analysis. Turn on notifications to stay updated on developing stories.